Election betting has officially become legal in the United States, a significant shift from past federal restrictions. As we head into the final phase of the election, recent polls indicate a narrow lead for former President Trump over Vice President Harris. However, various betting markets present a different picture, with Trump consistently outperforming Harris in projected odds. Advocates for these prediction markets argue that they offer valuable insights beyond traditional opinion polls, which have proven unreliable in previous election cycles. This emerging landscape of political betting raises important questions about its implications for the presidential race and democracy at large. The legalization of election betting stems from a pivotal court ruling in a dispute between the betting platform Kalshi and the Commodity Futures Trading Commission. A federal appeals court decided in early October that election betting on regulated exchanges is permissible. This ruling allows Americans to engage in yes or no contracts on platforms like Kalshi and ForecastX, operated by interactive brokers. For example, if you bet on Kamala Harris winning the election, you might purchase contracts priced at 40 cents each, suggesting a 40% chance of her victory. If she wins, a $40 investment could yield a $100 payout. If she loses, that investment becomes worthless. On the crypto-based prediction market Polymarket, which currently does not permit American users to bet directly, traders are giving Trump over a 60% chance of winning. While the identities of those participating in these markets remain unclear, it's evident that there's significant retail interest, along with a handful of high-volume, seasoned traders. Notably, Polymarket has seen a staggering $2.2 billion in trading volume for the upcoming presidential race, making political betting its most popular offering. Supporters of prediction markets maintain that these platforms react more swiftly to current events compared to traditional polls. For instance, if a candidate performs poorly in a debate, betting odds can shift almost immediately, reflecting real-time public sentiment. Influential figures like Elon Musk have suggested that betting markets are more reliable than polls because they involve real financial stakes. Public trust in opinion polls waned significantly after 2016, when they largely predicted a Clinton victory that never materialized, and again in 2020 when they underestimated Trump's support. Despite the advantages, prediction markets are not without flaws. Their track record for accuracy has been mixed. For instance, in 2016, they incorrectly favored Hillary Clinton, while in 2020, they better predicted Trump's competitiveness. Critics argue that these markets can be swayed by large traders, sometimes referred to as whales, whose significant bets can distort outcomes. There are also concerns that platforms like Polymarket attract a demographic that is predominantly pro-Trump or libertarian, which may bias results. Kalshi has defended its practices, stating that accusations of market manipulation are unfounded. They claim to be transparent about their internal data, showing a slight preference for Harris among larger traders. However, the overall perception remains that betting markets could undermine democratic processes by introducing the potential for manipulation and conflict of interest. As we approach the 2024 election, the future of prediction markets remains uncertain. Historically, interest in these platforms tends to decline after major election cycles. Companies like Kalshi, ForecastX, and Polymarket face the challenge of sustaining engagement once the election concludes. As they navigate this new and complex environment, the ongoing popularity of election betting could have lasting effects on American political discourse and the integrity of democratic elections.